you've been sitting on the sidelines saying, hey, I'm going to hold off on buying my first house, is it paying off for you? So that's what we're going to talk about today, because we have headline news. Home prices are cooling at a record pace in August based on the Case-Shiller Index. So that's what we're going to talk. But what I always say, let me preface what my quote is. You don't always want to judge a book by its cover, because when you really dig into the content, you're going to find some surprising information. So this is going to be our topic today. But what I want to address also in this video, and I'm going to put it in major context tomorrow, is when you're buying a property right now, is it best to get a fixed rate, an adjustable, or is there something in between, what we call a hybrid? So what I'm gonna do in today's video, I'm gonna kind of lay those out for you, and then tomorrow what we're gonna talk about is all those options in detail and what the winner is in your situation. So let's get over to headline news that we see today. Home prices are cooling at a record pace in August based on these S&P Case-Shiller Index. So if you see this video or you see this headline, you're probably thinking, oh my God, here we go. Well, let's really look into the details. So when we go down through this, I'm expecting, well, maybe home prices are down 15, 20%. Well, let's see how far they've really dropped so far. So we see here, home prices are still higher than where they were a year ago? What's going on, guys? I've been being told since 2020 house prices are gonna plummet. And you just told me here that it's cooling at a record pace that we've never seen in our lifetimes before. Well, they're actually up. Okay, what happened was the previous reading year over year, so this would have been July, about July, because this is August's reading. In July, we saw house prices from July of 2021 to July of 2022, they were up 15.6%. Now those same houses are only up 13%. So if you're asking me, I'm still high-fiving myself, because if my house is worth 13% more than what it was last year, I'm still happy, okay? Just think of it. If you bought 5, 10, in my case, 20 years ago, how much value have you increased your home? And then think of it this way too. How much have you paid down on your mortgage? So if you paid down on your mortgage quite a bit, and then your house value went up quite a bit, you've made a lot of money. Okay, so unless you bought in the last 6 months, that's the only time you might get burnt, but it also depends on where you're buying. So let's dig into this details a little bit more. So if you go through here, what I want to see is, where these houses are really going. But let's put some of this in the context. If you go down through here, look at these numbers. We see right here. Leading the price gains in August was Miami, Tampa, and Charlotte, with year-over-year increases of, let's just round this up just a hair, 30%. Okay, they're up 30% almost year over year. So if they went down 25, is that a crash? Well, no, it's not even giving back what it appreciated over the last year. So that's why you have to put a lot of this in the context. What actually is the definition of a crash? And I think a lot of people are also changing that definition like they do a recession. How we used to have that definition, but now it's tweaked because it doesn't fit the agenda. So what I strive for you guys to do is watch all this details, watch my information, find out all about the financing piece of the puzzle. Then also watch the real estate channels that you do. But what I strongly suggest you do, because you're not nationally, you're not looking to buy anywhere in the country. If you are, God bless you. But most people kind of know where they want to live. Please reach out to a knowledgeable, licensed, experienced, very good, high-rated realtor in your area. Work with them. Maybe you can find some pockets of homes that are more affordable. Maybe you can find a house that's maybe just went on the market that you can get into. That's why you use a realtor. Okay, so let's dive into this content a little bit further. When you go through here, I pull up in CNBC every day. What I do is I go to their main page and I go up through here and pick business, go down through here and hit real estate. And usually I get some pretty good content, but you're gonna see a common theme in this as well. Let me go through it and then maybe you can figure out what it is. Existing home sales drop 23.8% year over year in 2021. Okay, we just saw house prices going up. This says, okay, there's a common denominator here I'm not going to point out yet. Over here, we'll continue to see double-digit decline in home sales. Okay, let's just stop there. Let's see, what are the two things here that basically are a little skewed? If I read this, I'm like, okay, there goes the housing market. But let's look at the content. Drop year over year in home sales. It didn't say price. You go over here, what's going on with home sales? They've dropped. What's going on with home prices? Well, they're actually up. Okay, so please don't judge a book by its cover. So what we're going to talk about next is really not the economic calendar, because we see here that consumer confidence is down. Can you believe it? It's down. Well, I predicted that last month and it actually went up. How that happened, I don't know. But if you just look at all the headlines, you see nothing but bad, bad, bad. Okay, so that's that. So what I want to suggest too is please watch tomorrow's video. What we're going to do is we're going to discuss ARM rates, fixed rates, and what we call a 2-1 buy down. It's kind of a hybrid out there. We're going to go over those concepts thoroughly. We're going to actually give you examples on how it works. And then we're going to actually pick a winner. But you better be surprised on who the winner is going to be. Okay, so that's that. Today, like I said, there's really no economic calendar out today. Tomorrow is basically new home sales. That shouldn't be really shocking. And then the home oil inventory is where that's going to be. Why do we follow that? Is because it's a huge piece of the inflation puzzle. As we see oil going up and up and up, and gas prices going up, and diesel prices going up, it's making the cost of everything going out the roof. So let's get over to where mortgage rates are. That's why you're here. So the first thing we want to do is we go to the MBS market. This is a bond that trades on Wall Street. It's a bond that trades there, okay, just like every other bond. But the biggest thing here is the yield on this bond is kind of unique. It actually gets moved over to the mortgages. It's the biggest component of your mortgage rate. Okay, so that's why I follow this meticulously. A lot of people follow the 10-year treasury or treasury bills that has no relativeness to mortgages. It usually has the same kind of patterns, but this is the bond that you want to watch. So when this number goes up, which you really haven't seen it on the chart down below, it's kind of an anomaly when it goes up these days. What happens with it is it drives up the price of the bond and pushes down the yield. So we love when this price is up, the price of this bond. And again, as you can see down below, you very rarely see any green movements so far this year. So where are mortgage rates right now? Well, what we do is we go over to Mortgage News Daily, because they post the national averages, and they just came up with a new feature out there. And check this out. This is pretty cool. It'll help you quite a bit. So here's the mortgage rates that most people use, or the mortgage products that most people use when they're buying and refinancing a home. What Mortgage News Daily did is they went down through here and they changed this. Now you can actually put in your loan amount. So let's say I'm looking for a $300,000 loan. You can see what the national averages are right here and where that potentially would put your mortgage payment. But be careful, this doesn't include taxes and everything else, so please be wary. But again, this isn't a mortgage rate sheet from any bank, any lender, anybody out there. This is the national average. What Mortgage News Daily does is they advertise, or they send out flyers to mortgage lenders all over the country and said, if you had a client, with this scenario, what would your mortgage rate be? And they publish this, and this is what they are. So this is the national averages. So what do you do? How do you figure out what is the best mortgage product, or best rates, or best thing for you if you've decided to buy a house? Well, I made a pretty cool tool here for you guys to go to. So what you're going to do is go to therateupdate.com. Here it is. So what happens is most people, when they get a mortgage quote, it's like getting any other quote. You're looking to buy a car, you get a couple quotes. You're looking to buy this, you get a couple quotes. Or if you're looking to get a mortgage, most people want to get 3 quotes. So what I ask you to do is go out there and get 2 other ones. Then what we're going to do is I'm going to have you come back to us, and then we're going to run those numbers that you send us through our simulator. So let me explain this. When you apply for a mortgage with a mortgage company, within 3 business days, they have to disposition your loan. They have to approve it, turn it down, or withdraw it. Okay, but what they do is if they haven't turned it down or withdrawn it, they have to send you disclosures. A big piece of that disclosure is how much is what rate am I getting? How much are the fees? How much is everything? Well, that paperwork is what's called your loan estimate. What I want you to do is get the 2 that you've gotten and then come to my website, therateupdate.com. And here it is. What you're going to do is go right over to here and click the loan estimate tab. It's right here in the top. It's going to open up this box. We're going to have you fill in some questions. We're going to need to figure out how we get back to you, or how we reply to you, because what you're going to do is you're going to go through here and fill this out. Then what you're going to do is drag and drop into our secure system your loan estimates. Give us a couple hours, because we're going to get notified that you did this, and then we're going to get back with you probably within an hour or 2 saying, we ran your loan through all our simulators. It's over 85 different mortgage companies, banks, and lenders all over the country, the largest ones out there. And we figure out what is the best out there. Then we're going to reply back to you with the quotes that you have versus the quote we can get you. It's going to be a win-win-win for everybody. So that's what I'm going to ask you to do today. But other than that, don't forget, come back tomorrow because we're going to go through adjustable rates, fixed rates, or a hybrid mortgage out there. Which is best for you? So God bless, guys. Thank you so much for watching. Don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Take care, guys. God bless. I'll see you tomorrow. Bye-bye.